Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 2nd day of April, 2020, and this is the daily report for gold and silver. We had strong moves in the precious metal with gold gaining about $43. Of course, yesterday we sent out a trade alert. We entered the market at approximately 1602. Market is currently trading at about 1636. More importantly, what we identified today was a three-river morning star. Typically, we wait till confirmation before we enter the trade on that pattern. However, there were so many other indicators that matched up, which is what I'll talk about during the show, that I felt compelled to issue the buy signal yesterday. On today's report, I'm going to talk a little bit about the trade, what our upside strategy is, and where we look to move the stop up next. But first, to the price board. As you know, yesterday we entered a long position in June gold, where our entry price was 1602. Current pricing is 1636.20. Now it shows down a net of $1.50. However, the actual market closed up by about 2.75%, or a $43.80 gain. That's what's got us here. And so when we look at our candles, it's this really small one right here that is what is represented. That's because, of course, it's trading in Australia now. When we look at spot, there's still that discrepancy between the two prices, because here we're at 1610 in spot prices as opposed to 1636. Well, it's changing, but that's about a $25 spread, and that is quite high. Interestingly enough, palladium was flat today. It is actually trading at 2141. It closed in the morning session at 2141.30, so we're not reflecting a big change there. The dollar index, though, was stronger today. It was stronger in the New York market, up 0.44%. And that, of course, still shows that won't change. Solid day for the equities, with the Dow up about 500 points. The NASDAQ Composite up about 126 points, 1.72. And S&P's also trading higher on the day. They're gained about 2.25%. Lastly, Bitcoin, solid move, $15 at 68.80. Let's take a look at our technical studies. We are looking at a daily chart in candlestick format of gold futures. This, the continuous contract, which now represents June. The position that we took in yesterday was also in June. We got in roughly at 1602. The market is currently trading at about 1635. If you look at the particular small candle that is right on the right, it will give you an indication of what's going on. This, of course, is Australia, and it is the beginning of tomorrow's candle. Typically, what we do is we wait for the market to give us some kind of a confirming indication, and in the case of a bullish pattern, what you're looking for is to have a long green candle with a higher high and a higher low. So if by chance we see this kind of a move tomorrow, and most importantly, a break above a key level right now, I think it's minor resistance, but nonetheless resistance. That's the 23% retracement at 1644. We can see a series of double tops here, and that's what really was one of the three candles that formed the three-river morning star. A couple other things that are very interesting. Take a look at this. We've got our 50% retracement, which comes in at 1576. And I don't think anyone would question, but that was the exact low of yesterday. Secondly, we've got the market, and this is the 50-day moving average that I've drawn in green in a cross line. And as you can see, in yesterday's candle, what we actually saw was the market open and close below that level and form a pure doji, so to speak, maybe one tick apart. Then today, the low today is just at the 50-day moving average. It barrels through former resistance, if it really had resistance there, but that was at 1606. And as I say, the market moved up nicely. What we want to see is, most importantly, will we get this market to follow through with what I would call a confirming candle, because a confirming candle is absolutely what we want to see. I wouldn't mind seeing it move up, let's say as high as 1670. That would make me happy. But again, that's what we want to look for in terms of the pattern group, is this confirming pattern. The nice thing that I like about what I'm looking at is we had our tower bottoms here, and then we had our tweezer tops here. So that defines our very, very major resistance, major support. You can also see how this bullish Harami cross, which is after a defined downtrend, we can certainly say that that happened. You get this large red candle. And the red candle's low happens to be at the 50-day moving average. It's followed by a doji. So in this case, the doji is in about the center of the red candle, and that's why it's called a bullish Harami cross. This is your confirming candle. You would have been able to ride it up there. I believe in terms of our exit strategy, I think that I'm shooting for probably about 1680 to about 1700. I think we should be able to go there without any problem. I personally think it's going to challenge the former high at 1703, but that's far away. For the meantime, my recommendation is to maintain your current long position. In terms of our stop, we put it fairly loose. We're going to look to raise it, but I don't want to do it that quick. But my suggestion, my thought process right now takes me to the 50-day moving average, since that's been so critical. And that's currently at 1596. That would probably be the first place we move it, or we would consider moving it somewhere around 1606, which is that 0.38% retracement. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.